Welcome back, students, to Accounting 1303, Introduction to Accounting 1. This is Dr. Mercado speaking. I hope all of you are having a fabulous week. Now, in this particular chapter that we are covering, which is Chapter 4, most of the chapter deals with journalizing and posting transactions, but we do have some other things incorporated into the chapter, such as our financial statements. So this lecture is going to be focusing on exercise 4-7, which is the preparation of our three primary financial statements, which is our income statement, statement of owner's equity, and our balance sheet. Okay. In my prior videos, I do illustrate how to record journal entries as well as how to post to your ledgers. There's a wealth of information on your textbook examples on how to post from your journals to your ledgers. Make sure that you take time to read the chapter as well as review in detail the illustrations provided that clearly explain the steps needed to be able to transfer your information from your journal to your ledgers. Now, in this short video, I am going to be completing exercise 4-7. Let me jump to it, which is your financial statements. So basically what we're given is a trial balance. It's provided after 1 month of operation. So it's a brand new business, and this is what happened month number 1. We are being asked to prepare an income statement, a statement of owner's equity, and a balance sheet. Okay, so I've set up my financial statement so we can begin working on it. Remember, we always start with the name of the business. In this case, the name of the business is TJ's Paint Service. The first financial statement that needs to be prepared is the income statement, and this is for the month ending July the 31st. Okay, so if we recall, the income statement incorporates two things: revenues and expenses. So we always start off with our revenue account. Okay, so we're going to look at our trial balance, and we're going to locate our revenue account, and we're going to go ahead and look, and we have a revenue account called painting fees. That starts with a 4, which signifies it's a revenue account, and it has a normal balance of a credit. Revenue accounts always have a credit. So my revenue account is for $3,600. Okay, so the name of my account is painting fees. Okay, and we generated revenues of $3,600. Now I'm going to be marking them off just so we know that it's been used. Okay, over here on my trial balance. Okay, next we're going to bring in all of our expenses. Okay, we're going to list all of our expenses, and if you notice, your expenses usually have the word expense behind them. So all of these are our expenses. I'm just going to bring them over. So I have wages expense of $900. I've got what else do we have? We have rent expense of $250. Sorry about that, $250. Okay, and then I've got phone expense. Phone expense of $50. Then I have transportation expense of $60. And then we have utilities expense of $70. And then we have miscellaneous expense of $25. Okay, so these are all of my expense accounts. Okay, and let me mark them all off because we've used them. Okay, okay, so I'm just going to be marking these off because I've used them before. I don't want to reuse them. I want to make sure that at the end, I know that I've used all of my accounts. Super important that we keep track. If you have them, you highlight them. Do whatever you need to do just to ensure that you use all of the information provided, and make sure that you are, when you're transferring the information to your financial statements, that you are posting the correct dollar amount, the correct account, stuff of that nature. Okay. Okay, so those are all of my expense accounts that have been used. Okay, so I've already used up my expense accounts, my revenue accounts. Now I'm going to get my total expenses. Okay, I want to get the total for this. So my total is going to be the sum of all of these. I'm going to add all of these together. That gives me $1,355. So I made revenues of $3,600. I had total expenses of $1,355. Now I can calculate my net income or loss. Okay, you've got net income if your revenues are greater than your expenses. You've got a net loss if your expenses are greater than your revenues. In this case, my revenues are greater than my expenses, so I'm going to have a net income. Now, my net income is calculated by getting your total revenues, which is $3,600, minus your total expenses. And that's going to give you net income of $2,245. Okay? So that is my net income, $2,245. Okay? That is the first financial statement, your income statement. Okay? Now we move on to our statement of owner's equity. Okay? For the statement of owner's equity, we're going to start off with TJ Ulsa Capital. Okay? Now, who is TJ Ulsa? TJ Ulsa is the person that has invested into this company. Okay, they're the owners of the company. They've made an investment into the company. So we need to go ahead and locate, okay, what was their capital starting last month in June? Well, we didn't have a business back in the day because it's only been 1 month of operation. So my beginning capital will be 0. Okay? If it's a brand new business, your beginning capital will always be 0. Okay? If it's a rollover, your business has been in existence for months or years, then you should carry forward your capital balance from last time. Okay? But in this case, the problem says that this is taken after 1 month of operation, so it's a brand new business. Okay? So my initial capital is 0 because it's a brand new business. Then during the month, we had an investment during July. So we put money into the company. And how much money did we put into the company? Well, the problem says here that we had a capital investment of $3,205. Okay? So I've got $3,205 as my investment. So my total investment is going to be $3,205. My initial capital plus my investment is $3,205. Okay? Now I'm going to bring in my net income from my income statement. Okay, so that number is going to be coming in. Insert, let me see. From your income statement. Okay, so that number is going to be going in there. Okay, so your net income was $2,245 during the month. Okay, then we have to deduct any withdrawals. Okay, so do we have any withdrawals? Okay, yes, we did. We had one withdrawal of $500. Okay, one withdrawal of $500. Okay, so now I can calculate my increase in capital. Okay, so I had net income of $2,245. I'm going to subtract the withdrawal that the owner did for personal use of $500. That's going to give me an increase in capital of $1,745. Okay. And now I can calculate my capital as of the end of the month. Okay. And how are we going to do that? We're going to get our total investment plus our increase in capital of $1,745. That's going to give me my ending capital of $4,950. Okay, that is my ending capital. Okay, I started off with 0 because it's a brand new business. During the month, I invested $3,205. Okay, I generated income during the month based on our income statement of $2,245. I withdrew $500 for personal use, giving me an increase in capital of $1,745. So your ending capital is your beginning investment of $3,205 plus your increase in capital of $1,745. That gives you $4,950. Okay. Now, last but not least, we've got our balance sheet. Okay. In our balance sheet, we basically balance our assets, liabilities, and equity. So we're going to start off with our assets. Okay. Assets are anything that you own. So here we have cash is an asset, accounts receivable is an asset, supplies is an asset, and paint equipment is an asset. So we've got 4 asset accounts. Okay. So cash, 4,300. Accounts receivable is 1,100. Okay. Supplies is 800. And paint equipment is 900. Okay. So we're going to add those together. And then that's going to give me total assets. So I'm going to add them. And that gave me $7,100. Okay. So my total assets are $7,100. Next, I'm going to bring in my liabilities on the right-hand side. Okay. Liabilities are anything you owe. Okay. Before I do that, let me be consistent. And let me mark off all of the assets that have been used. That way I don't get confused. Okay. Just mark them off. Okay. So now, liabilities, anything you owe. Liabilities usually have the word payable at the end. We've got one liability account called accounts payable. Okay, so we have accounts payable. And my accounts payable balance is $2,150. Okay, let me mark that off. $2,150. Okay. Now I'm going to bring in my owner's equity. Okay. And my owner's equity is going to be TJ ULSA Capital. Okay. Now where am I going to get that number from? That number is going to be coming from your statement of owner's equity. Okay. That number goes right there. Okay. So whatever you get on your statement of owner's equity as of your ending capital, you're going to bring that over to your balance sheet, and that is $4,950. Okay. And now I can get my total liabilities and owner's equity. Okay, and we're going to add those together. Your liabilities and your capital. And that gives me $7,100. Remember, your total assets need to equal your total liabilities and equity. If they do not equal, then you made a mistake somewhere. You need to go back and figure out what the error is. Okay. Most of the time, the error is that the capital account students want to use the capital being represented here on the trial balance instead of using the amount from your statement of owner's equity. That's a common mistake, so be on the lookout for that. Typos, students type in the wrong numbers, whatever the case might be. Review your work carefully. But when you finish your balance sheet, the purpose is that your assets will equal your liabilities and owner's equity. If they don't, that needs to be a red flag that you need to go back and review your work. Okay. So that is basically the preparation of our 3 financial statements using a trial balance. Okay. Please make sure that you read the chapter before you attempt any of your assignments. And if you have any questions throughout the week, Monday through Friday, I am available. Please make sure that you reach out to me. Make sure that you include the problem number, your attempted solution step by step, and your specific questions, and I will try to address them as promptly as possible and get back with you so you can complete your assignment. Okay? That is it for this lecture. I hope you have a wonderful rest of your week, and until next time, thank you.